how do you execute a trade? With Nadro, I use Heikin-Ashi bars to place an order. ES, I use 500 to 1,000 bars. You base your orders now on candlesticks, 3 minutes. So I execute with hotkeys. I have chart trading on, keyboard shortcuts on, and so I control my trade quantities with my keypad. I pretty much only buy market, sell market. I almost never place a limit order unless I'm just really, really wanting to be competitive about a scale out. Then I'll use a limit. And for that, I'll right click on the chart and place that limit. I cancel all, I flatten all, I turn on and off attached orders, all that I do through hotkeys. And in the course, I teach exactly how I do that, show all of it. So I've always taught people Heikin-Ashi is just a tool. Heikin-Ashi is almost a set of training wheels. Heikin-Ashi helps in 2 ways. It helps people see a little bit cleaner rhythm because the colors change less often of an up bar versus a down bar. So you can see rotations better. Heikin-Ashi helps with that. Heikin-Ashi also helps with local momentum shifts. So after, let's say we're looking to get long, you've had enough of a pullback to begin stalking long. As soon as you see enough of a pullback is there, okay. And now there's also, after enough of a pullback, there's a Heikin-Ashi shift, right? You get a bullish Heikin-Ashi bar that closes. That's a way for newer traders and experienced traders, if you like to just keep it simple, to have a set of training wheels, a guide, an indicator, a red light, green light that tells them, okay, the narrative is there, acceptance is there, DVA is there, rhythm is there. Where do I pull the trigger? Oh, here. I have a process for doing it. It's a way of me giving you, here's a process, do it, follow this process. It doesn't mean that you need to stick with it forever, that it's the only way to execute, that it's something with edge that I'm saying is the secret way of doing things. There's nothing fancy about Heikin-Ashi. It's simple, it's dumb. But there's nothing wrong with simple and dumb if you've listened to me for long enough, okay? So Heikin-Ashi is a way of programmatically, quantitatively signaling what I used to call and still call micro trend line breaks, right? When I took my trade in the S&P today, I was essentially deploying what we might call a micro trend line break. I took a look at all these highs, 1, 2, 3, 4, 5 highs, and I said, where can I see, if I was going to draw a line across these, would it be here? No, right? I guess at the hard right edge right here, we may have seen that, but I'm not really concerned with 2-bar pullbacks. I need more bars. So as there's more bars pulling back, where's the highs? Where's the slope of those highs? Well, look at it. It's right there, right? So my entry long was here. I look at what's the rhythm of the pullback? What's the bar-to-bar overlap? In this case, there was a lot. So I had to lean out that slope. If you get a nice clean pullback, like something like this, well, guess what? See how the slope is more steep and now I can get involved here instead of a chop. Here's a flaggy type pattern, right? You got to, it's really not steep, whatever the word is, shallow slope, because it's very flaggy. It's a complex multi-leg correction. So anyways, Heikin-Ashi can give you where some of those points are, at least the immediate momentum shifts of a micro trend line break, as I call it. That's all it does. You could look at MACD histogram changing slope. You could look at RSI or stochastics dipping and then turning up. It's all the same stuff. It's all derived from where price is relative to where it's been and then how that's changing. That's all it is. My goal through this talk is to enlighten you, not to try to teach you that something I do is magic. And I hope that is apparent. It's the concepts that matter. It's the understanding. Why do we take a Heikin-Ashi shift? That's what matters. That's because I theoretically believe that the market ebbs and flows. Markets don't go in straight lines. They ebb and they flow. If I can get a read on that ebb and that flow, which we refer to as rhythm, I can better time my entries on my trading time frame, which is a lower time frame than where my narrative risk reward read comes from. And if I can time my trades on a lower read within the landscape of better risk reward, I'm simply amplifying that risk reward. Big picture risk reward was not offering me 7-1, 8-1, 9-1, but I get 7-1, 8-1, 9-1 because I amplified it by using rhythm, which allows me to use a tighter stop. That's the theory behind all of it.